Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 9th of July, 2020. Thanks for joining me again as we approach 1,800 episodes of the Trader Bite. Today, it's episode 1,793. Hopefully, you're hearing me loud and clear. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the European markets lead with the equities as SAP, a large software firm in Germany, has lifted the DAX. The DAX is up 1.56%, followed by the Euro Stocks 50, which are up 0.82%. Crude oil is a laggard today, down 13 cents or 0.32%. And so gold is also back at 1818. Seems to like that area there. The U.S. markets are leading with the DAX up 65 points. The S&P is up 4.5 points, which is just 0.14%. The bonds are up 4 ticks, and the Treasury note, the 10-year note, is up half a tick. So that's where we stand this morning. It seems like the market is continuing what had occurred on the close yesterday, which is a rally to give us a neutral extreme up day, technically, not exactly the kind we'd want to see, not like the one for Tuesday on the sell-off, but the expectation overnight was that we would likely continue higher, and we're doing that now. So that's where we stand. This morning, we did get some key figures. We got balance of trade out of Germany, which came in at 7.1 billion, was forecast at 21.1 billion euros. And then initial claims out of the United States came in at 1,314, lower, which is better than the forecast of 1.314 million versus 1.38 million expected. We still have wholesale inventories. At 10 o'clock Eastern, expecting a negative 1.2%. The prior's plus 0.2. Negative on wholesale inventories is better. This is for May. Fed's Bostic at noon, and then the 30-year bond action at 1 o'clock. And that's where we stand this morning. And so this is what we're looking at this morning. Let's switch gears here and take a look at what was expected yesterday. So yesterday, the primary scenario was, and remember, it's very, very important as a trader to keep in mind the time frame that the person you're listening to or interacting with is managing. Okay, everything I'm doing here is in a day time frame. In other words, I'm just looking for the action in the RTH session. No positions overnight. No Globex positions either. So bear that in mind. My biases and my view and my context, my read and everything I'm sharing is really driven at what is likely to happen today, so we can align ourselves with it, because that's all that matters. What doesn't matter is what's happened to the left. What matters is what is likely to happen to the right based on what has happened to the left and other inputs. So yesterday I expected a response. I was looking for responsive buying to breach that overnight high of 31.52, and then to push lower. I was looking for a lower low, lower high. If you recall, I actually put a circle here on purpose to show a lower low. Was expecting a lower low, lower high, and then a push up into the close. The turn yesterday, as I had indicated, was expected in the 50 53 to 55 area. I said that 55 is important to hold here. And not only is it around the mid-century figure, but it's the low from up here, which resulted in a low volume node. So we have a low volume node. And I also pointed out yesterday that we had left a double top behind on the daily, a week high. Um, we left behind a weak high and a turn up above 31.55 and holding steady would target the point of control and would target the double top or the weak high from Tuesday and Monday. So here's what the market did. Oh my God, this cat. Here's what the market did. We did get a response up, but it did push quite a bit. It squeezed right through the 55. Here's the 55 right here, pushed to 62. We saw kind of the same thing on Tuesday where the expectation was a push into 65 and it went to 74. It seems to be pushing through by 7 to 10 points. Not a great thing. And then I was looking for an impulse down. Here's the image of what was expected pre-market. There's your impulse right here, the impulse down and a squeeze lower. And we did manage to get that. So responsive buying, hold up here, respond down, take the low out. Uh, uh, Take the low out and then pull back, consolidate. And I was looking for a push higher. And that's mostly what we got. It's impossible for me to know where the market is going to turn, but there are specific characteristics I was looking for. Given the neutral extreme down, I was expecting the slow to be taken out, and that's done. I was expecting mean reversion or a responsive buying spree, and that was done. It pushed farther than expected, and I was expecting it to turn back up into balance at the close, and that was done. Now, fabulous, right? Fabulous. How do you get on it? That's a whole different story and would require a ton of detail, which we don't have the time for here, but I do share those things in Convergent wherever I can. So that was yesterday. That leads us into aujourd'hui, which is today. Here's the overnight session. The overnight session shows just a very, very tight session relative to prior sessions. We push up to continue. We push up to continue the neutral extreme close. Yesterday was very interesting. I mean, it squeezed that low, and then it ended up finishing on the other side. This creates a situation where we had neutral here, we had neutral on Tuesday, and then we had neutral yesterday. The market is telling us that both sides are active and they're just clubbing each other over the head here. This is what neutral days kind of indicate, that the market is really at a point of inflection and is having a very hard time deciding on the direction. So as we sit here, we are still stuck in the short-term, the very short-term balance that we formed over the last few days, which unfortunately to the shorts is likely to cause us to move up. If we are in balance and we have an opportunity to push away from it, and we test and fail to do so, what is the market likely to do? If it finds buyers below balance, what is it likely to do? What's the auction logic here? The auction logic is it's likely to go to the other side of balance and test the other extreme, and that's what I'm expecting today. So it sounds like I'm flip-flopping, but what you're hearing is being responsive to the price action, what the market is actually saying versus what I think it should do, should being the operative word here. So we pushed to 31.70, pulled back. We basically traded around the close. Overnight inventories mixed. Delta has been negative until just now, and we're pushing against this weak high in the overnight session. You can see that high had a lot of volume, all the way to the top. We have left the mid, the VWAP, and the point of control below us. And what we have here is a nice base in that same 64-65 area, 64-65 area for a push for a response or a support for a push to continue 31.75 and squeeze through. Remember the the uh, the target above. It's been for now a few days. The target above is 89.50, 31.89.50. That's the next balanced area. Now that we took out the gap zone, that's where we're likely headed. So watch out if you're short. You heard it here. What does the order flow look like? Here's CT Bookmap. Again, you can find it at ctbookmap.pro. This shows me what's happening inside of the book. This is plotting not only the trades that have happened, which is what we see on our charts and on the tape. This is plotting where the intention was, what prices the intention was, and how long that intention has been there. So we call that the heat map. And you can see that the market's kind of pushing from side to side to side, but it hasn't really challenged anything significant until right here, until we push to 31.70, where we have pretty decent collisions. See these big dots? Those are collisions. That is liquidity that's sitting in the market that gets lifted. And so once we collide, the market has two options. It either is overwhelmed by the liquidity there and pulls back generally to support, which again I said is around 31.64.65, to advertise for buyers, consolidate, and then get the buyers it needs to push through. We have a fair amount of liquidity above, between 70 and 75, but this liquidity, a lot of this liquidity is recent, so I don't trust that it'll hang out here. And then the next area up is 31.80, 83, and then we're off to the races to 89. So that's how things are shaping up. The market is not really interesting. We don't see strong bids below, not even at 31.50, which normally has a pretty good bid on it. The mid-century figure, major strike. We don't see stable liquidity there either, which is interesting. The market is skewed to the upside when it comes to liquidity. Remember, people enter. So a lot of people look at this and say, but that's resistance. If everybody wants to sell up here, that's possibly true. I don't know. I'm not going to pretend like I know. But here's how it works. Participants enter on bids or market orders. Generally, a lot of market orders, small, market orders that get peppered in. And then they put out their stop, which everybody here knows that a stop is not known because a stop is a market order that just gets triggered when price is there. So there may be massive amounts of stops that we don't see down here. I don't know that they're there because they're just market orders. However, pretty much everybody exits. A lot of participants exit on limit orders on the top side. So when you see offers sitting above, this is participants expecting. Oh my God, this cat! I'm sorry, she's so loud. This is market participants anticipating continued movements and movement higher, and are putting out their offers to exit. So this is why it ties in with the old trading adage, which is the market tends to move towards liquidity. It's not that the liquidity acts as a magnet and pulls the market. It's that's where the stronger participants are aligned for the market to go. That's the direction they've selected. So anyway, while my cat is doing opera in the background, I want to remind you that today we are having I'll be speaking on Futures IO about edge pools. We'll be introducing this new product from my brokerage, edgeclear.com. Here's the link. I'd love for you to attend. Edge pools are this special pricing structure that is modeled after what I had at my prop shop, where everybody's it starts with a very competitive cost structure, and then it's the cost structure drops when everybody contributes volume. So we are pooling your volume with other people, other participants, and you're benefiting from that. So that's what an edge pool is. We'll go into some details, rules, and things like that. It's nobody else has got one of these out there, and it's built on how prop trading is generally priced. Okay, just comes from my experience as a prop shop owner. Um, so what are we expecting for today? So today we are on top of the point of control from Tuesday and the upper high volume node from Monday. I'm expecting a little bit of chop here. I'm looking for a responsive market back into 3160 or so. I'm expecting a base here, and I'm looking for it to squeeze through the overnight high. If it doesn't do so, it could do so right from the open, but I'm assuming that it's likely to balance out. It is a gap, a tiny gap there, and then I'm looking for it to take out the 74 quarter, 74.50 top week high to start to squeeze towards 31.89. We're in the middle of the week. There's nothing holding this back. I'm looking for the market to push to 31.89.50 today, and that's well within range. It's less than 20 points away. Secondary scenario is we do squeeze through the high. We push through the high, we squeeze up, push into the 3180 stock zone, consolidate in this area, and then we get a response back to this 3167 back the open, and then we start to move back towards 3155 before we bounce back up. And what we have is another day where the market is kind of taking a breather. Remember, this whole area here is balance. And so we're trading in this upper distribution. We've checked the 35 and have moved away from it. We've definitely checked the 3104 and moved away from it. So we are in this balance zone, and I expect that since it did its check, so the last check we did was yesterday down here, and that was rejected. And so I expect the auction to walk the other way and check for prices higher, because that's what an auction is supposed to do. It's a price discovery mechanism. Okay, so I'll leave you with that for today. Don't forget to register for the webinar today. It is at 4:30 Eastern, and there's a link in front of you. It is also in the live chat. It is also in the description of today's video and yesterday's video of the Trader Bite. Good luck. Take care.